Right, thanks everyone, the familiar faces, some new faces. Great to see Pointerra team members here outnumbering shareholders, although many of you are shareholders. So welcome everyone. Welcome to those following along at home and through various social media channels. We've got some live posters in the audience who like to share the news about what they hear. And also to those watching this recording, and I'll start by making an apology for last year. We set this meeting up last year to record it. We had high definition 4K video, but someone forgot to press record on the audio, and despite our best efforts, we weren't able to produce a viable recording. So what we promised last year, which was to put a recording of both the presentation and the Q&A up on our YouTube, we weren't able to do. So I would like to think that this year we'll be able to deliver into that. So today, it's about 15, 16 slides. I'm going to move through them reasonably quickly. There's a bit of a sort of a product and business refresher at the front end, which a lot of you will be familiar with, so I won't stay too long on that. We'll do a quick recap of FY22, but more importantly, we'll look on. We'll talk about the start of FY23 and what the outlook for the business is. And for those of you that have got questions, it's probably for the sake of moving through the presentation, it would probably be great if you could leave those till the end, and then we've got plenty of time for Q&A, and I can jump back into slides if need be. So thanks, Neville, and congratulations on your re-election and your ongoing support as our chairman. And I'll move into the presentation now. So for those of you who aren't familiar with the story, and most of you here are, so I won't labour this point too much. But we've got some new phrases that we've started using in the past year or so. There's words like digital twin weren't really part of the vernacular when we started this business, and that's a phrase these days that's very much, it means different things to different people. But at the end of the day, what we do is really quickly enable people to work with 3D data and turn it into whatever digital twin they desire. But we do it. We simplify a really complex process. There's a bunch of workflow steps on the right-hand side that have traditionally been the domain of high-end desktop computers, really expensive software, really expensive hardware, and in many cases, hundreds of people working on different chunks of a very large data set. So back in 2015, some of the founders in this room got together and decided that there was perhaps a better way to get the answer or the insight or the solution to the problem of working with 3D data. And we had some proprietary technology and some maths, a mathematical approach to interpreting 3D data. And we cloudified that workflow. We put it into the cloud, create a subscription business model. And one of the pleasing things is to look back 7 years on from getting together and 6 years on from becoming a public company, and be able to happily say that what we're doing now is what we thought we were going to do way back then. So early stage businesses love this word pivot. We've pivoted in sectors where we've found, and we've followed our nose, or we've followed our wallets in terms of where there were bigger customers eager to spend more money. But by and large, our business model remains faithful to what we envisaged all those years ago, when with the assistance of a couple of the Nearmap founders, and some friendly brokers who had a shell that was the pathway to public company land, we became Pointerra in early July of 2016. So that's the backstory. If you wanted to distill it down, which we tried to do with the assistance of some of our really clever marketing and comms people, we use the phrase simply faster. So we simplify something that's really complex and we do it really quickly. And that combination of simplification and doing it quickly generates value. It saves people time, it saves them money, and we express that through our subscription model. We used to talk about what we did. We talked about data as a service and analytics as a service, and was very much inwardly focused. What does Pointerra, what do we do? What we realised with the assistance of some bright people about over a year ago was that didn't actually talk to what we did for our customers. So we kind of turned the way we describe what we do around, and instead of talking about data as a service and analytics as a service and things like 3D Insight, we actually talked about what we did for people. So we solved their core data management and workflow problems. We allowed them to ask more complex and sophisticated questions of their data in a dynamic and a programmatic way. And ultimately, we allowed them to distill down everything that they've learned about their asset, which in some cases is a utility network with 2 million poles spread across 100,000 square miles of service area. We were able to help distill down what we'd learned and what we'd helped them learn through business intelligence dashboards that we call Utility Explorer for that sector. And although it's the pointy end of our product pyramid, it's actually the most valuable part of what we do, because it delivers business intelligence to the C-suite, to people charged with making decisions with regulatory environments and risk management at a corporate enterprise level. So that, again, we've it's what we considered, it's what we conceived all those years ago. It's just expressed differently, and that certainly has been out in the marketplace now for a year or more, and it has been really well received. Of course, the reason we're here is because our customers pay us, and pleasingly they continue to pay us. We've got a really sticky recurring revenue business model, and we've demonstrated that we can grow a customer spend from $5,000 or $10,000 a month to hundreds of thousands of dollars a month, and that they'll keep finding ways to spend more money with us because we keep adding to the list of things that we do for them, particularly higher up our product stack. We've got 6 sectors that we target, and none of that should be a surprise to anyone here, and I'm going to hone in on a couple of those at the back end of the presentation, because we've got paying customers in all sectors apart from defence and intelligence, where we're still in that unhappy place of having to do unpaid proofs of concept, which was something we used to do a long time ago in our other commercial sectors, but pleasingly don't have to anymore. But we could spend hours talking about the solutions and the nuance between, whilst Pointerra 3D Core might be a consistent application across all of those sectors, as you get into analytics and answers, you're still working with 3D data, you're still working with digital twin information and imagery and what have you, but the questions being answered are more nuanced and more relevant to a mine versus a utility versus a road, as you'd imagine. So what that's meant is that we've had to invest a lot of our R&D effort, and it's the guys in the room here that lead the majority of that, into solving problems for our customers in those different sectors. When we started, we were very much focused on surveying, mapping and AEC. They're the biggest addressable markets. It's where people pay you by the seat, versus the actual asset owners, utilities, transport, mining, oil and gas and defence and intelligence, where we're actually dealing with the operator and owner of the asset. They tend to have bigger budgets, and we've found a lot more success there. But and certainly we've invested most of our R&D into that utility sector, but are now using that success and those learnings from developing this stack into scaling across those different business units. And we'll do a deep dive into a couple of those towards the back end of the presentation. But if there's a couple of things to take away today, one is this theme of simply faster. The other is doing what our customers tell us, and we've been unashamedly customer-led from the get-go. You see a lot of technology businesses led by the tech team, by the dev team, with a view on how things should be done. And whilst we've got some really talented and incredible people in this room and in different parts of the world that are part of our R&D and product effort, we've always had a culture of listening to what our customers want and prioritising our platform development journey and our roadmap in line with what our customers want. And typically those customers that are prepared to pay, as you'd imagine in a commercial enterprise, they tend to get to the front of the queue. The great thing about a SaaS business is what you develop for one customer, you can pretty much sell to every other customer in that sector. And that's certainly been fantastic for us across our journey. They're quotes. There are lots of customer attestations that we've had over the journey, and I'll talk to the most powerful one at the back end of the presentation, which is something that's emerged with our customer down in Florida in the past 6 to 9 months. Our growth strategy is really simple. There are 3 things you need to grow a business. You need a thing to do, you need capital, and you need people. There are tons of ideas and things to do, and there's tons of capital, but it's the people that you need to succeed. So we've seen And you've probably all seen fantastic business opportunities that have gone nowhere because they've had the wrong people, or they've had great people and they've had access to capital, but maybe they're a solution looking for a problem. We're very much focused on scaling our business through people. The number one challenge to our growth is people, and the number one success story to our growth has been our people. And you can ignore what we do and know that if we continue to find great people, and that's now in multiple time zones across the globe, then that's the biggest impediment to our growth. And pleasingly, over the past couple of years, we like most businesses and most people in life, we don't get everything right. But in this room in particular, the people that have been part of building the machine and building the solution that is Pointerra have been incredibly stable, and they're incredibly talented. And everything that we're able to do for our customers is because of a lot of the people in this room. So it's about people, and then it's about working with our customers, our prospects, and our industry partners to simplify the complex. It's a simple theme. And if you get the trust of a customer, and they trust you perhaps with Pointerra at core, and then you start to see workflows that are causing them pain, or they get to the point where they actually start to throw problems at you, there starts a really virtuous cycle up of them growing their spend, them trusting you more, them asking you how much more can you do. And again, there's a classic story that we'll get to at the back of the presentation about one of our largest customers and how that started at a very embryonic level. I mentioned a few minutes ago leveraging our success in the energy utility sector, the learnings we've had in building out our product and our solution, and then how to execute that into different verticals to grow out our headline revenue and ACV, and of course being laser focused on making sure that those people that start to pay us aren't given a reason to stop paying us. There's lots of metrics that matter in SaaS, in software as a service. One of them's churn, one of them's net revenue retention, and we're not a company with thousands of customers. We're a company with less than 100 customers, and some of those pay us only $500 a month, and some of them pay us as much as multiples of hundreds of thousands of dollars US a month, and by and large, they all stay with us. Our longest serving customer is a small West Australian survey firm, and they've been with us since 2017, so 5 years. And as a small business, they watch every penny that goes out the door. So the fact that they're not only with us, they're our first customer, they're a customer today, they're spending 3 times what they were spending 5 years ago. It's not a lot, but it demonstrates to us and to me, that's my real bellwether, is that customer still finding a reason to say yes each month to pay the invoice. And they're only saying yes because we continue to make their business, we simplify the workflows in their business, and as a small business, that makes them more profitable. So our growth strategy, again, nothing new there, but just trying to do the basics day in, day out really well across multiple time zones. We operate in not just across multiple time zones, but across different sectors, as we looked at a couple of slides ago. And pleasingly, if you look at what drives opportunity for us, whether it's the economic cycle that each of our targets are in, or the broader geospatial community, which sort of sits across. I mean, we're a geospatial technology solution. We help people work with geospatial data to build digital twins and manage their physical world. So a lot of what's going on in the geospatial sector globally, and our target sectors has an impact on our outlook, and we're obviously well tuned to the macroeconomic environment globally, to the macroeconomic environment in each country we operate in, which is principally Australia and the US, and also into the individual sectors. When you see commodity prices come off, and those customers in the extractive industry sector looking for, they often look to stop spending money. And we can be seen as a variable cost, and what we've got to be careful and clever and agile in doing is making sure that we show them that we actually help them save money in other parts of their business. So they're spending money with us, but in doing so they lower their overall operational OPEX and their sustaining CAPEX. So again, we feel like we've had a tailwind of sorts since we formed the business. And those sort of five components up there at different times and for different reasons are more important. And part of scaling this business is as a management team is trying to stay agile and not losing sight of what's going on around us and over investing in perhaps a sector that's not going to see us generate the returns we're looking for. So all of that product, that marketplace, our journey generated for FY22 what was really, and again this information's been out in the public domain now since the end of August, what was really a set of numbers that were unprecedented, but you'd expect so because we've been on a growth trajectory. Pleasingly, we're actually ignoring non-cash items. We're actually able to book a small operating surplus at the EBITDA level in FY22. But I was saying to a shareholder who asked me the question on the way in about cash tracking, revenue tracking, ACV, and how do you make sure that that all the arrows point in the same direction? And it is a bit of a juggling act because the prize for you guys as shareholders and for us as a business isn't to be a profitable small or medium business. The prize is to scale this at the top line and be an extremely profitable medium to large business. And there's a no man's land you can get caught in between. We can optimise this business from a cost perspective and grow into that 18 mil ACV, turn that into 27 or 8 million Australian dollars revenue and probably make 15 a year and flatline the business. And if you're a small business owner or operator, maybe that's how you'd go. You'd try and keep life simple. But as a public company with pleasingly, a lot of the management team and increasingly a lot of the broader Pointerra team are becoming shareholders. Our interests are very much aligned with yours. So we're not here to be a profitable small and medium business. And if we were, we should be a private company. We're a public company with ambitions of getting to 100 million US annual contract value and turning that into a plus 100 million Aussie revenue. And those we know, because of the trajectory of our cost profile, that at those sorts of numbers we're incredibly profitable. And what does that mean? The holy grail in capital markets is high growth and high profitability. And if you can demonstrate that, then I think we'll all see pleasing returns from a share price perspective. But really, a pleasing year after FY21. But we're already almost coming up towards halfway through FY23, so time doesn't stand still, and that's very much in the rear vision. I'm not going to read through the commentary because this, as I said before, this information's been in the public domain since the back end of August when we put out our 4E. I think for me, pleasingly, this next slide sums up the journey we've been on. In terms of annual contract value, in terms of cash flow, and this year, or in FY22 and hopefully into FY23, we see the business at an interesting juncture because we can operational leverage is the financial analyst term for a business that starts to look profitable that's had costs either above or tracking revenue. So we've got this ability to flex the business from a cost perspective and generate operational leverage, which is fancy speak for profit. Or we can continue to throw cost at the business, which is people, because the only substantial cost in this business is people, and do that to invest in trying to accelerate growth in revenue. And that's the balancing act that we're charged with, and from time to time come to the market to seek additional capital to help make those step changes in investment. We've had a philosophy as an early stage business where the founders and the management team own a substantial part of the company, that we wanted to not take the US or the high growth VC approach and raise tons of money and try and get that timing right around market movements and hire tons of people and make tons of mistakes and lose agility, lose our way, as we've seen with lots of our customers and partners, particularly in North America. We wanted to be disciplined and focused on creating a sustainable business. And pleasingly, since we raised money from Bevan Slattery back in 2020, so coming up 2.5 years ago, we haven't needed to raise additional funds, and I'm on record as saying it's never. And if you could present me with 20 talented software engineers and product people and another 20 incredibly talented BD and sales folk, we'd hire them today, and in that case we'd need additional capital. Finding all those people at the same time has been a challenge. The lack of mobility. We hired some people last year over Zoom, and four people. They've left us now, the Aerovant guys. Great business, left us with some fantastic clients, but culturally, it turned out they weren't really a fit. And I think what we've learned is that when you're onboarding a customer, when you're trying to hire a new team member, you really need to get to know the person. We have a saying in SaaS that people buy from people. So through COVID lockdowns and trade shows being, even though we're a software business, people still buy from people. And with the lockdowns that are pleasingly part of the past, and all the trade shows in North America where business-to-business commerce is transacted, the fact that disappeared off the map for a year and a half really, it challenged us from a sales perspective, but it also challenged us in terms of meeting people that we'd like to bring into the team. I've spent something like 70 nights in North America this year on 3 separate trips, and a large part of that was engaging with customers and employees I'd never met before, and also talking to new people that we're courting. So with that said, as I mentioned a little while ago, we are getting towards a third of the way through FY23. So what does it look like? There are multiple pathways to profitability. We could get there through focusing on just one sector, and there's this question comes up a lot with the investment community. You're across these 6 sectors. You seem to be doing really well in the utilities one. Is there a risk of being a mile wide and an inch deep? And that's a real risk. So you try and do too much and don't ever get anything done properly. There's another risk that we believe, which is being a mile deep and an inch wide. So we've had some incredible success from the utilities sector, and that's allowed us to scale, to invest in solution and product development and to scale the team. But we know that our platform solves problems across those other 6 sectors, and it's just not in our DNA to not be responsibly targeting those through product people, through dev people, and through BD and sales people. So as I said before, there are multiple ways for us to emerge profits in this business by managing costs. But if that comes at the cost of not investing in growth, which is top line revenue, then in a couple of years' time, our fear is that we'll look back and wish that we'd actually pressed the accelerator harder to grow that top line revenue, because that's where the ultimate prize is, which is being a medium to large public company, not a small to medium public company. In terms of progress, we put out our Q1 update at the back end of October for the September quarter, and I guess the highlight for me there was it was our largest ever quarter of cash collections, and we've been working really hard with our big 4 utility customers to try and close that gap between reported ACV, reported revenue, and the cash that they pay us from time to time. And if we were a business that had 1,000 customers paying $500 a month, we would have no issues whatsoever in forecasting cash collections. There would be no lag between revenue, between ACV, and between cash. We've got this unusual client base, and we've got lots of those small customers that pay us monthly, and then we've got a handful of large customers that make up the bulk of our ACV, and each of those large investor-owned utilities, which are listed mostly on New York Stock Exchange, have wildly different procurement cycles and budget cycles, and are influenced by different state and federal-based challenges, and all of that distills down into behaviour that isn't always behaviour that we need to see, which is committing contractually to paying us money, onboarding really quickly, and then starting to use the platform so we can invoice them and get paid. And but again, that theme was present at the last AGM, and it was present at the one before that. But we'd like to think that that as we continue to grow across different utilities and we get more, there are 200 investor-owned utilities in North America. We count 6 as customers at the moment. There are about another 1,500 that are cooperatives or owned by states and counties. So it's a massive addressable market for us. We're developing lower price solutions for those smaller utilities that sometimes might be, it's odd for Australians to contemplate, but where we have Western Power, or we might have Energy Queensland up in Queensland, but in North America, literally the local council might own the poles and wires. Which is bizarre, and cooperatives by their nature are trying to deliver a service to the community and make a marginal sustaining surplus, so they're very cost conscious. So we've had to be quite innovative in addressing that significant number of customers, but who probably only want to spend less than $100,000 a year versus the big utilities that are now looking at spending 3, 4, 5 and 6 million US a year with us. So really interesting the way just in that energy utility sector, how even there's such a stratification of customers. And so I'm getting to the bit now that I really want to talk to you guys about today, because most of what's up here is either you've seen before or it's financial information that's already been in the public arena. And this goes to being both a mile wide and a mile deep. And I'm not going to go through each of those solutions, but the Pointerra stack between the Pointerra 3D stack between core analytics and answers solves a bunch of different problems in a bunch of different sectors, and that's why we're relevant across them, and that's why it's incumbent on us as a business to make sure that we've got resources, so BD and sales at the tip of the spear, product people interfacing between customers and salespeople and the people in this room, and then the guys in this room. And we need to scale those guys so that they can build product and solution out across these different sectors. So what I wanted to do is close with a deep dive into a couple of probably, if we look back on calendar 22, are our 2 biggest success stories. And one of them's come completely out of left field, and that was Amazon. So, when we started work with Amazon and their technology partner Velocity back around this time last year, Amazon, as you'd imagine, have tons of these massive distribution centres and warehouse facilities dotted across North America. There's something like 300 in North America and another 1,000 odd globally, certainly in Western countries. And they're, you can imagine the vehicular movements. There's a ton of stuff going on inside those facilities, which speaks to automation. So robotic movement and scanning and all sorts of carry on. But interestingly, we've engaged with the Amazon team on managing vehicular movements with the objective of keeping people out of harm's way. So when you've got that much traffic movement, massive issues on safety of individuals, and increasingly on the horizon. Getting closer on the horizon is driverless vehicles, and so Amazon are obviously trying to drive cost out of their business. They're trying to reduce that last mile spend, and they're doing that through extreme innovation, which as a business they've demonstrated across their journey. So for us to spend a year with them working on a solution for autonomous manned vehicle navigation, equipment tracking, and a visualisation environment for those facilities, to get through that and then have that scale to, as we previously mentioned, about 200 sites across North America, and then ultimately we hope more than 1,000 globally. That with an ACV at the moment that's circa $1 million US and is probably going to grow to 5x that, is so different to what we were doing a year ago. if you think about a year ago, it was utilities and it was mining, it was oil and gas, and it was surveying and mapping and AEC. And we had some facilities. We were doing some facilities work, facilities being a building like this or a more active building like that. But to my previous theme about the applicability of our solution across different sectors, this is just the absolute home run example that if you're not in those, if you're not out there trying, you're going to miss stuff like this. It's been this opportunity started at a really, it was very much embryonic. What can you do? We've tried a bunch of different things and nothing's really worked. And remember, working for us is turning the data into the answer really quickly. So anyone can capture data, 3D data. It's really, if you've got the hardware and the means, it's not that difficult to do. But getting the answer from it is where the problem is, because the data, if you can't process it and interpret it quickly enough, its efficacy falls off a cliff. And in the next slide, I'll talk about an extreme example of the time frame between capture and answer. But for us, leaving calendar 22 and moving into calendar 23, knowing that we've got this couple of hundred sites to grow into, and then we'll be able to take that warehousing and distribution and facilities management solution and sell it into other organisations around the world is just a fantastic validation of just how widely applicable our core solution is, and then how clever we've been, and the people in this room in particular have been, at agile and rapid development of bespoke analytics to solve a really specific problem that sometimes might be leveraging a solution we built for another sector, but with a different slant on it. And again, if there's another theme I can leave you here, it's just how much we rely on the people in this room and their peers on the East Coast and in North America. So one of those great stories that probably a year ago wasn't really in our horizon, and we didn't really have the ability to talk about it. But the other one, which should surprise no one, is the FPL and NextEra story. And we've been working with FPL since 2018. So Florida Power and Light, it's owned by NextEra Energy. I think it's by market cap, it's the largest energy utility in the world, and excluding those who generate. And the Americans have this phrase called pole hardening. Translated into a phrase you guys would understand. It's understanding the condition of each and every pole in their network and assessing its condition, and then coming up with a CapEx program to make sure it doesn't fall over, that it doesn't fail, that it continues to do its job, which is to deliver energy to the customers of the Florida region. So we were working with Precision Hawk back in 2018, who at the time was our largest North American customer. And they were flying for FPL, and they were flying a drone. They'd be in the field for a day, and it would take them weeks to get the data to FPL's engineers. And the data was actually an electronic file about the condition of the pole that an engineer could sit down in front of in another software program and design whatever needed to be fixed. So very, boring, not exciting workflow, but given the time it was taking from flying the mission to getting the answer, FPL was extrapolating out over a couple of million poles in their service territory that it was going to take them decades to deploy nearly $1 billion in sustaining CapEx, i.e. their pole hardening program, and they realised that cadence just wasn't going to cut it. They were going to fail their regulatory obligations, they were going to fail their customers. So they had to come up with a way of squashing that time frame. And that's where we fortunately happened to enter the scene through one of their contractors in Precision Hawk. The wins we had there meant that our solution was adopted by all the other FPL contractors. I think we've noted there something like 400% improvement in efficiency. And that trust was really hard won. Back in 2018, 2019, we were a small emerging Australian company that had lobbed into the US with 2 or 3 customers and hung a shingle out and started business, had no track record, had 2 energy customers back in Australia, in Powercore in Victoria and South Australian Power Network. So we had some existing utility customers that we were able to reference. But we were a nobody in North America, and probably still are today, by and large. But we won the trust of FPL, of the operational teams we were working with, and then their management, and then senior management. And through that story and that journey across, you can read it for yourself, an incredibly diverse. Utilities are incredibly siloed businesses, and they all do different things, and they don't cooperate really well, and they don't share innovation really well. It's odd because you'd think that they'd need to work together really effectively across the business units, and they don't. That came to a head in September, October, and more recently with the hurricanes, where we were. Which is probably our proudest moment as a young business, where we were operationalised by FPL's emergency response teams, who have had access to satellites and people like Nearmap flying planes after the storm's gone to see what's damaged. And so they get high value from that imagery, but they'd never been able to get the sort of fidelity and insight into the condition of individual poles because planes look down and they kind of look sideways a bit from an imagery perspective. So you can answer some questions, but not all the questions. Meanwhile, you've got 10,000 bucket crews lined up the interstate, ready to drive in, and literally before Pointerra were driving in blind to figure out what was broken and what needed fixing. You know, the network's down. There's no energy anywhere, so the smart meters aren't reporting their condition because everything's offline. So they were, there was a lot of scepticism amongst FPL leadership that you could actually fly LiDAR, because their experience was waiting weeks and months to get the answer. That you could literally chase the storm in some really challenging aviation environments with the sensor pack and then land it and get it into the cloud, and then for us to do our stuff quickly enough that we could make an impact on their storm response. So they had some very tight timeframes within a number of things we had to have been able to do within a 24-hour period following the passage of the storm through the different counties as the storm tracked up the coast. And this got down to the basic logistics of having hard drives in cars screaming across interstates that had been, because the place is a ghost town, everyone's bailed because it's, evacuation orders, or putting hard drives in helicopters and flying them across the state to find a facility that had a fat enough up pipe that had electricity so we could get the data into the cloud. But we knocked it out of the park. We shone a light on the fact that that despite working with them for 3 or 4 years, those different business units in FPL hadn't consolidated all their data in Pointerra, and the COO was slamming the desk saying, "I thought we were paying Pointerra to do all of this," and so there's and they have been, but not all their business units have been doing what perhaps we'd like to think they would have done, and so for a bunch of different reasons. The Hurricane Ian storm response in particular was a real maturity and coming of age of our business in that energy utility sector, and the C-suite of a $100 billion market cap company saw us firsthand in extreme emergency conditions, and the team here, the team in North America, worked around the clock for 5 days, and our friends at AWS who let us spin up 5,000 virtual machines to run 24/7 during that time, and we delivered. And then Nicole came through a couple of weeks ago, and it was a much smaller storm and would have ideally been our starter storm if you could have such a thing, because it was a lot less stress. But we really performed well, and I think the greatest thing you can have in life as a person or as a business is advocacy. As a person, when someone says, "Oh, you should speak to that guy, that girl, they're fantastic." As a business, when one of your customers says to people who you'd like to be your customers, "You should speak to those people at Pointerra, they're fantastic." There's no more powerful advertising or marketing than you can do as a business. And FPL, right down the bottom there, the very last line in this presentation today, they are walking us into. Utilities don't compete. It's a unique sector, so they've all got different service territories, and so they're quite collegiate, and they love to share what they're doing. FPL, by virtue of the storms that hit it, multiple times each storm season, are incredibly innovative. They have to be. They're also very open and sharing of their successes and their failures, and they're walking us into opportunities with other US and regional utilities at the C-suite, which is the value is just off the scale, where those utilities are saying to FPL, how did you solve this problem and what are you doing here? And pleasingly, we're part of that conversation. And the 5 or 6 utilities that are customers of ours, the large utilities that are customers, FPL's, all bar one, FPL have been responsible for introducing us to. And so as we look to scale that utility sector business or energy utility sector in North America and then in other parts of the world, I can't overestimate how valuable that journey has been for us. And it's about consistently turning up and performing and doing the little things every day and not letting the customer down. And it's a whole bunch of people. Yeah, it's a great tech solution and we're on a great platform in AWS and we're really clever at how we communicate what we do, and we think we've got a pretty clever business model, but it's the people that do it. And to me, I've got the easiest and the hardest job. It's easy in that I've amazing people that enable me to do what we do, and it's incredibly hard because our customers don't always do what they tell us they're going to do in the time frame that they told us they were going to do it in. So there's this constant. As a business that's trying to grow really fast, we have those challenges, and it would be great if it was all in one direction, but rarely in life are you afforded the opportunity to go in a straight line. So a couple of deep dives there. The Amazon facilities management story, a bit out of left field, and the FPL Next Era story, which makes great reading, and if we're clever, and if FPL keep thinking that we're good people, we should be able to you talk about total addressable market, the North American or US energy utility sector for us has a north of 50 million US ACV. So we talk about our different targets where we're trying to get. We could get there just from utilities, and we've got 6 other sectors or 5.5 other sectors that we're targeting. So it's a great place to be, but as I've tried to impress upon you guys, it's not easy. If it was easy, everyone would be doing it. And we appreciate your support, and we'd all love to see share prices that are different than they are today. And of course, a year and a half ago, the share price was at a place which perhaps the fundamentals of the business didn't justify or didn't back up. And the disconnect between capital markets and the underlying business is a story as old as time. So you just got to get your timing right. But we, as owners in the business, alongside yourselves as owners of our stock, we're very much aligned with you. We're not traders. Some of you have the opportunity to be, which if you are a trader, you've perhaps done reasonably well over the journey. But we're pretty proud of what we've done to date. Lots of hard work still to come, but we think at a point in time, and you often look back, and the inflection point will be a bit obscure. And my journey in the capital markets has taught me that the inflection point, both at the top and the bottom of a price cycle, are often really hard to pick. Or when you look back and say, well, that's really odd, because there were way more important things that were going on in the business than what actually than the event or the time frame that actually turned the tail in terms of the direction of the company's share price. So hopefully that didn't take too long. Just over 40 minutes, but thanks for your time and your attention.